Hey everyone! Welcome back to our channel where we help you navigate the world of investing. Today we're going to be discussing a topic that's been on a lot of people's minds lately, cryptocurrencies. Specifically, we'll be discussing how to invest in cryptocurrencies as a beginner. Cryptocurrencies have been gaining a lot of attention over the past few years, and for good reason. With their decentralized nature and potential for high returns, many investors are looking to get in on the action. However, investing in cryptocurrencies can be a bit intimidating for those who are new to the game. That's why we're here to break it down for you, step by step. Step 1. Understanding cryptocurrencies. Before we can dive into investing, it's important to understand what cryptocurrencies are and how they work. Simply put, cryptocurrencies are digital currencies that are secured by cryptography. They operate independently of central banks, and their value is determined by supply and demand. Unlike traditional currencies, cryptocurrencies are decentralized, which means that they are not controlled by any single entity or government. Instead, transactions are verified and recorded on a public ledger called the blockchain. Some of the most well-known cryptocurrencies include Bitcoin, Ethereum, and Litecoin. Each cryptocurrency has its own unique features and uses, so it's important to do your research before investing in any particular one. Step 2. Setting up a wallet. Once you've done your research and have decided which cryptocurrencies you want to invest in, the next step is to set up a wallet. A cryptocurrency wallet is essentially a digital wallet that allows you to store, send, and receive cryptocurrencies. There are several different types of wallets available, including software wallets, hardware wallets, and paper wallets. Each type of wallet has its own advantages and disadvantages, so it's important to choose the one that's right for you. Software wallets are the most common type of cryptocurrency wallet and are generally easy to use. They can be downloaded onto your computer or mobile device and are often free. However, they can be susceptible to hacking or malware attacks. Hardware wallets, on the other hand, are physical devices that store your cryptocurrency offline. They are generally considered to be more secure than software wallets, but they can be more expensive. Paper wallets are another option and involve printing out your private key and storing it in a secure location. This option is generally considered to be the most secure, but it can be inconvenient to access your cryptocurrency. Step 3. Choosing an exchange. After you've set up your wallet, the next step is to choose an exchange where you can buy and sell cryptocurrencies. There are a wide variety of exchanges available, each with their own fees, security measures, and user interfaces. Some of the most popular cryptocurrency exchanges include Coinbase, Binance, and Kraken. It's important to do your research and choose an exchange that's reputable and meets your specific needs. When choosing an exchange, consider factors such as the exchange's trading volume, fees, security measures, and user interface. You may also want to consider whether the exchange supports the cryptocurrencies that you are interested in trading. Step 4. Making your first purchase. Once you've chosen an exchange, the next step is to make your first cryptocurrency purchase. This can be done by linking your bank account or credit card to your exchange account and then placing an order. When placing an order, you will typically be asked to specify the amount of cryptocurrency that you want to buy and the price that you are willing to pay. Keep in mind that cryptocurrencies are volatile and their value can fluctuate rapidly. So it's important to invest only what you can afford to lose and to diversify your investments. Step 5. Staying up to date. Finally, it's important to stay up to date on the latest developments in the world of cryptocurrencies. This can include keeping track of market trends, regulatory changes, and new technologies that may impact the value of your investments. One way to stay informed is to follow cryptocurrency news outlets and social media channels. You can also join online communities and forums where you can connect with other cryptocurrency enthusiasts and share information and insights. In conclusion, investing in cryptocurrencies can be a rewarding and exciting opportunity. But it's important to approach it with caution and diligence. By understanding the basics of cryptocurrencies, setting up a secure wallet, choosing a reputable exchange, making informed investments, and staying up to date on market trends, you can minimize your risks and maximize your potential rewards. Remember, investing always involves some level of risk. So it's important to invest only what you can afford to lose and to diversify your investments across different asset classes. With these tips in mind, you can start your journey into the world of cryptocurrencies with confidence. Thanks for watching, and we'll see you in the next video.